Welcome to Caribbean Business Review, where insight meets impact. We bring you economic and financial updates, sharp statistical breakdowns, and data driven insights on the forces shaping the region. Smart analysis, bold ideas, real Caribbean intelligence. This is CBR. Welcome, everybody. This is the Caribbean Business Review. My name is Joseph Cox. We are at episode 11 in our season 1. And today we hope that you'll enjoy our offering, as we do think we have a packed program for you, as per usual. In our main interview today, we're going to be speaking with Stephanie Murdock, who is the Chief Human Resources Officer at Barita Financial Group. And we're looking at the whole issue of rethinking performance management in a changing workforce. Now, ladies and gentlemen, we are looking at, in that kind of engagement, we'll be looking at a whole gamut of issues. Those would be including things like retention, use of emotional intelligence, strategies for deeper staff engagement, development and welfare, among others. Because as our workforce continues to evolve, one of the things that we have to recognize if we're driving our businesses is that we have to be adaptable to the changing dynamic. And that's just a reality of life. So we're looking forward to that conversation with Stephanie Murdock a little later on in this hour. Coming up in our CBR briefing, we will be discussing the changing face of Caribbean migration economy in the face of a number of new rules and processes that have been brought to bear both internally within the region and outside. We'll be looking at that in its totality and looking at the impact and how we really navigate some of those issues. All of that will be followed by our Market Watch and Global Pulse segments, which are our news segments where we're looking at both regional business news and international business news, and particularly as it might impact the Caribbean. Now, ladies and gentlemen, I want to also just look very briefly at two little things that have happened, and not so little actually, within the region, but two issues. And one is the introduction of an electronic motor vehicle registration certificate in Jamaica, which is basically they're putting their vehicle licensing system completely online. Now, that's a welcome move. But at the same time, as we are seeing in the Bahamas, whereby the sand dollar awareness, their digital currency, the awareness of it is very high, but adoption is lagging because the people just don't know how to use it. And that's one of the things we have to recognize as we embrace the technology, which is welcomed, but we have to recognize that not everybody is on the same footing and there will be a transition period. And we have to ensure that the policy dynamic is so constructed to take into consideration all those varying groupings so that we actually end up with optimal solutions. In the meantime, we're looking at also Bermuda's G is slowing, and they're a victim of their own success because there is surging adoption of it. And frankly speaking, it has led to network congestion. So that's also another issue. But for me, ladies and gentlemen, the story of the week is Suriname reducing its debt from 146% of GDP in 2020 to 83.1% in 2024. That is a reduction of roughly 63 percentage points. That's amazing by this standard. And it is now on track to reducing those numbers to 32% by 2029. So all in all, that is really a positive story. And Suriname, I mean, we know that Suriname has had to undergo some radical policy shifts, but it seems as if this is working and will basically inure to the credit of the country as they go forward. In terms of the international scene, not a lot more has been happening other than what we are getting used to now. President Trump is now indicating that they might be moving the base tariff, which affects most of the Caribbean, to 15%. So let's see what happens this week, because I'm not putting my neck out on the block for any of these things because we just don't know anymore. But ladies and gentlemen, that's it from me at this point in time. I invite you, as per usual, to like, share, and subscribe to this broadcast, and also entreat you to stand by for our CBR briefing, which comes up next. Welcome to the CBI Briefing. I'm Joseph Cox. This week we examine a powerful undercurrent reshaping the region: migration and mobility. From labor shortages to policy tightening, the Caribbean is navigating a new era marked by demographic decline, rising immigration pressure, and an unspoken race for talent. Migration has always been a Caribbean constant, but today's scale and urgency are unprecedented. 70% of tertiary graduates from CARICOM countries now migrate to OECD nations. 42% of secondary level graduates also leave, creating a profound talent vacuum. Sectors like healthcare, education, and construction are feeling a crunch. Yet instead of recruiting regionally, businesses are opting for foreign workers via work permits. Why? Red tape, inconsistent enforcement of CARICOM free movement, and simply too few qualified applicants remaining. Meanwhile, traditional destination countries like the UK and US are also tightening access. In the United States, new hurdles include new visa integrity fees, rising work permit costs, potential migrant relocations in the case of legal infractions to third country detention centers, which are all making migration costlier and riskier. The UK has shortened the graduate visa from 2 years to 18 months, blocked overseas recruitment for social care workers, and doubled the wait for permanent settlement from 5 to 10 years. However, while many are leaving, others are arriving. Venezuelans in some CARICOM states receive 1-year visas. CARICOM nationals, by contrast, are capped at 6 months within the region. Elsewhere, Bermuda now requires Trinidad and Tobago passport holders to show valid US, UK, or Canadian visas. OECS countries are routinely advertising jobs for OECS nationals only. Even transit travelers aren't spared. At the Turks and Caicos Islands airport, passengers' passports are being withheld until their outbound flight, a troubling sign of rising suspicion towards Caribbean travelers. These aren't isolated policies. They signal a broader geopolitical hardening of migration regimes, even as Caribbean economies need labor more than ever. CARICOM recently announced as at October 1, 2025, 4 member states, Barbados, Belize, Dominica, and St. Vincent, will implement full free movement. This is being celebrated as an incremental success story, but gaps remain. Haiti is still structurally excluded from the regime. Enforcement of skilled national certificates is inconsistent. Even within the OECS, rising inbound migration is straining systems in places like St. Lucia and Antigua and Barbuda. So while the October 2025 agreement represents progress, the regional migration architecture remains uneven and fragile, vulnerable to discretionary enforcement, institutional inconsistencies, and asymmetric pressures. Governments are also becoming more assertive, not just about who enters, but who gets to invest, hire, and lead. In Bermuda, local companies must be 60% Bermudian owned. Exempted companies may be fully foreign owned, but ownership rules can influence leadership structure. In Guyana, local content laws now require foreign firms, especially in energy, to employ set percentages of Guyanese nationals and secure official local content certification. These rules are shaping staffing contracts and corporate control, and they are being vigorously enforced. In the Cayman Islands, new immigration reforms are signaling a decisive shift in labor market control. According to Minister of Employment and Immigration Michael Miles, expatriates who fail to secure permanent residency after 9 years will be required to leave the island for 2 years before reapplying. Temporary permit holders must stay with their original employer for at least 2 years. Those wishing to change jobs after that will have to leave the island for at least 6 months before applying for a new permit. The government also aims to reduce what it calls job hopping abuse and ensure greater stability in the work permit system. While intended to protect Caymanian employment and streamline processes, these measures could tighten flexibility in sectors already struggling with labor shortages. This follows an earlier decision to impose term limits and longer re-entry bans on non-Caymanian civil servants. Further, the Cayman Islands' decision to extend the waiting period for status eligibility from 1 year to 22 years for foreign spouses signals a rising ethno-nationalist tone in immigration policy. The implications of all this are strategic and immediate. Labor shortages are slowing growth. Remittances mask long-term productivity loss. Contradictory immigration rules undermine cohesion, and anti-migrant sentiment is escalating. The pressure is now pushing private sector leaders to speak out. On July 16, William Mahfoud, chairman of the Wisynco Group, proposed that Jamaica import Haitian workers to address labor gaps, which drew swift social media backlash and prompted some political distancing. His call, however, underscores the growing urgency and the need to align migration policy with economic strategy. Migration is no longer just a personal journey. It's a structural force shaping our economies, labor markets, and sovereignty. The Caribbean now faces a clear choice. Continue with fragmented fixes or chart a coordinated strategy that protects dignity and supports growth. Now that's it for this edition of the CBR Briefing. I'm Joseph Cox. Okay, welcome back, everybody. This is the Caribbean Business Review. My name is Joseph Cox. Today, as we enter into our interview segment, we are so pleased to welcome Stephanie Murdock, who is the Chief Human Resource Officer at Barita Financial Group Limited. And Stephanie, of course, is such an expert in this area that one decided that I really had to just pick an area that really should resonate with all of us as people who either own businesses, aspire to owning businesses, entrepreneurs, or persons, frankly speaking, who just work with businesses. And this is how we are going to be looking at this conversation today, because we are looking at rethinking performance management in a changing workforce. Now, Stephanie, as I welcome you to the program, the question, really what comes to my mind is, we have been doing these performance management strategies, if you will,
Yes.
for forever. But at the same time, one of the things that has confronted us as a country, and in Jamaica, and as a region, is low productivity. So clearly, our measurement strategies are flawed and perhaps impatient of reform. How do you treat with that sort of conversation?
Well, Josie, first of all, thank you for having me on the program. I'm very excited to talk about performance management and basically what I see as the evolution of the area from when even I started working about 20 years ago. And you raised some critical issues about productivity in the region, and has performance management really failed as in terms of how we administer. Joseph, when I started working, my performance management framework was a mini booklet. It looked something like, I don't know if persons remember, like an English CXE booklet. It had about 5 pages, and we captured such critical skills like punctuality. And, I would have received ratings like A or B, C, whatever. And when you look back, how on earth would that have been relevant to capturing my productivity on the job? So whether I came to work early, that's what they were looking at. The inability to have any kind of conversation about my work experience, it was just kind of slapping a grade on a piece of paper. It was not reflective of being very serious about productivity and where we're going and really how I was performing. Fast forward to 2025, and the landscape has changed because It's a different workforce, Joseph.
Mm-hmm.
You know, you're talking about the millennials, you're talking about the Gen Zs, and we continue to be faced with chronic issues like productivity, low workforce morale, labor relations landscape that is just so dated and archaic. We're looking at laws that were implemented in the 1970s. What is so critical now is how do you capture performance within a changing workforce and make it relevant to capture key economic outputs, not
Right.
just for the business, for the country. So as a entity, you have to be very, very serious about performance management, realizing that what was administered to me is not relevant to today's dispensation.
No, I hear you on that, and I do agree. And therefore, the issue really, I would think, is do we need to functional transition from what we used to have as an annual performance
Hmm.
appraisal? Some companies do it every 6 months. Do we need to just basically scrap all of that and deal with something that is continuous? So continuous, because you see,
Hmm.
when I come at you after 6 months or a year, and I say, oh, well, you need to improve in that area, to me, that introduces a lag, a productivity lag that you could have probably treated with initially. So I
From
am
day
looking
one.
at it from day one. So is it a case that you need continuous monitoring with perhaps performance improvement plans if needed,
Hmm.
additional mentoring, coaching? How do you see that entire dynamic evolving in today's workplace?
You know, I still believe there is a role for a more formal assessment at the end of the year.
Mhm.
And for want of a better word, a mid-year, assessment as well. But what works, Joseph, and I have irrefutable data to tell you that it does, is the continuous assessment from the beginning of the employee's life cycle with the company. So from day one, there has to be a kind of, you know, continuous communication between the team lead, the employee. You have your monthly check-ins, sometimes weekly, depending on the nature of the job. Because I mean, if you're in sales, if you're in something that's revenue generating, you certainly don't want there to be a passage of time before you are having a conversation with the teams. But it has to be where feedback is live.
Yes.
So, waiting until 6 months to say, well, Steph, it's not happening. You have not been doing a good job. You're looking at 6 months of wasted productivity, missed targets, the
Precisely.
passage of time where my performance has not been optimum, where the business performance, based on what you hired me for, has not been optimum. How are we serving either the individual or the company in that respect? And you have to realize as well, Joseph, that you see these young people, they want feedback now. It's a generation where they want to feel valued, they want to feel like there's purpose. They want to feel like they're making a contribution to whatever it is that they're doing. And without that feedback, then you'll find that you're going to continue to have high attrition rates if that's a problem that you're facing with as a business, and low productivity. You're not capturing the performance in a way that resonates with them. You have to be having the conversations very often.
But then, for too many of our companies in the Caribbean, I mean,
Mhm.
I would also have extensive experience with these things too.
Mhm.
We are seeing a scenario where training is treated like advertising. It's something that you do at the last if you don't have
Mhm.
absolutely any option at all. It's relegated to the bottom of the pile. But nowadays, and I call it particularly in the post-COVID new
Mhm.
normal, you have to have greater emphasis on reskilling and upskilling as the case may be, because the nature of jobs is evolving so quickly.
Mhm.
But I don't know that I don't get the sense, and tell me if I'm wrong, but I don't get the sense that many companies are even seized of this argument, much less operationalizing any changes to treat with it.
You are not wrong, Joseph. And, I'm embarrassed to say that there are many of my colleagues within the region that still subscribe to a rather dated way of looking just at development of your human capital and how you manage that and retain that. Post COVID, when we reflect, we would have realized, at least from the HR function, that there was a lot of missteps on our part. For many HR professionals, we have done things by rote. Remember, I came up in a generation where HR professionals don't know maths. And so it was really personnel management. So you're not really trained to think outside the box. You're not looking at people risk as business risk. You're not looking at development of an employee as really a retention strategy. And what post COVID has shown us is that it's a new way of thinking, not just for HR, but it's a new way of thinking for employees. They want different things and they are demanding different things from the organization. So gone are the days when you're presenting a strategic budget from a people
Mm-hmm.
perspective and the first thing that they cut is training.
Yep.
Anytime you look like your expense getting out of control, and you're doing
First
the
thing.
balance with revenue, let's cut training. Let's
Yep.
let's take a 10 million off training.
Every time.
We don't need that. No, the staff members are telling us that they need that, and the business environment is saying that we need that. You have AI, machine learning, things like critical thinking, problem solving. When you do interviews now, I certainly not asking boring questions. So tell me about yourself and tell me about, some experiences that you've had. Can you think critically? Can you solve problems?
Yep.
Are you curious? What's the level of analysis that you will bring
Yep.
to the job? And whenever we see gaps of this nature, if this is an individual that you want to continue working with in the organization, you have to look at ways that you can
Yep.
upskill, reskill, because with the landscape as it is now, and we're competing with machines,
No, indeed.
you
Indeed.
best believe that your competitive advantage will be your people.
No, indeed. And therefore, when you're looking at that sort of scenario,
Hmm.
how do you what role does one emotional intelligence actually bring to that table? Because
Hmm.
honestly, in my own experience, I find that that's an area that people really need to bone up on, to be honest with you. But the other part of it is in terms of the overall retention strategy and
Hmm.
retention, the importance of retention within the companies. I mean, there's this age-old argument, oh, people don't leave bad companies, they leave bad supervisors or whatever it is, or bad jobs, they leave bad supervisors.
Hmm.
I don't know, because you also have another aspect of it, which is known as company culture.
Hmm.
I have worked in spaces that are so toxic that, honest to God, when you come out of it, when you leave it, it's like, oh God, a weight has lifted my shoulder. And
No,
that's the end of
no,
it.
it is.
So,
Joseph, I have spoken to individuals, who, when they have left some companies, they will talk to you about experiencing PTSD. And we laugh and we're saying it very tongue in cheek, but some company cultures can be sufficiently so toxic that it's like a weight off your shoulder when you exit. But before we even get to that, I love the fact that you raised emotional intelligence,
right.
because a few years ago it was one of those kind of fluffy, ambiguous words. What does emotional intelligence even mean? And I can tell you, Joseph, that with AI making an expert out of many of us in many areas, when we do interviews now, the areas that we focus on are not necessarily the technical mastery of a particular area. We're looking at the softer skills. The softer skills have now become even more important than the hard skills. And
Yep.
I'm going to say something a little controversial, that some of the issues that female leaders have been wrapped on given a bad rap about being too emotional or using their gut, discernment. Studies are now showing that boards with female members tend to make better decisions. And that is because, I mean, yeah, that we're going into a whole other
Yeah.
discussion there, but we're talking about the importance now of emotional intelligence and
Mhm.
being able to recognize your blind spots,
Mhm.
being able to do the self reflection, being able to have a level of empathy and understanding for situations and circumstances around you. These are issues that are key drivers when we now talk about good leadership. And good leadership is what we are looking for because we make an assumption at a particular level that you have technical mastery. Yeah. What we want to see is how you're going to lead. And to be a good leader, you have to have some level of control over your emotions and understand how your emotions affect how you deliver on a particular job. And therefore, I do not necessarily subscribe to people don't leave companies, people leave bad leaders. People leave toxic cultures, which is a mixture of the leadership
Thank
and
you.
the business in and of itself.
Thank you.
All right. So I may be working with a leader that is, mediocre, but I enjoy the company. So I'm going to look and see, are there any other career opportunities within the same company? Because this is my happy place.
Yeah. Yeah.
So I'm not going
Yeah.
to rush to leave because of one person if there are other opportunities for growth. But people are leaving, especially, your millennials and your Gen Zs, because of what the company stands for,
Mhm.
what the leaders stand for. And it's just not a good cultural fit for them
Right.
where they are
Right.
in their life right now.
Right, because you have scenarios where, because I mean, the toxicity is one aspect of it,
Mm-hmm.
but you have scenarios whereby in some companies the persons end up doubling, tripling up. They're
Mm-hmm.
overworked and overstressed. So
Mm-hmm.
I always say this thing to my staff and my team: everything can't be a crisis, and you can't be stretched 100% of the
Yeah.
time, and everything. It does make sense. They are human beings. So
Yes.
you have to prioritize and you have to recognize it, because if everything is a crisis and everything is an emergency, then nothing is an emergency or a
Mm-hmm.
crisis. So
Mm-hmm.
you have to be very clear. But then the other aspect of it, Stephanie, that struck me particularly with the younger group, the millennials, etc., is that, for example, when I started working, it would be if you change a job every year or every 2 years, it was frowned upon. You were seen as being unstable,
Mm-hmm.
etc., etc. But nowadays, among that particular age group, that cohort, as it were,
Mm-hmm.
that is the norm. I mean,
It
they're
is.
moving because of income, they're moving because of upward
Mm-hmm.
mobility, etc., etc. They're moving. So I don't know. And this thing about company loyalty, whereas that has its place, I'm not sure that is really pride of place anymore.
No.
I mean, people, they're not going to sabotage an entity, but I don't know that is any longer the one of the important metrics to guide decisions.
No, no. I mean, in HR, there are some very basic metrics that we still look at, so we look at the retention rate
Mm-hmm.
because it is important in terms of the organizational health if you have a very high staff turnover. But there is some element of attrition that's healthy because a couple years ago, when I'm looking at a resume, as you said, if I see someone leaving somewhere after 3, 4 years, I'm like, ugh, this person can't keep a job. But now you find that the average tenure is maybe 5 years for someone 35 and under. And that's because they want different things. And sometimes it's not necessarily because they're unhappy with the company. It's just that they have set different goals for themselves. And if they feel that they have outgrown a particular situation, a particular environment, they're going to move on. Now, what does that mean though when we talk about transfer of knowledge and sustainability of the business if you're losing your good talent, every 3 to 4 years? I try not to look at it as a negative when I have a high performer who has decided to leave the company after 5 years. I'm not happy. And, as a business, we're going to try and retain. But what I will tell you, in those 5 years, we're going to try and invest in the talent and get as much as we can from
Yeah.
the person for the period of time, because we recognize that if we have raw talent, high performing talent, they're going to be competitive on the market. And sometimes it's not a function of a failure of our retention strategies. Sometimes it's really just a time for them to move on. Yeah.
No, I hear you. I hear you on that. But then you see, this is also one of the conversations and one of the arguments put forward to defend trying to gut the training budget. That what is the point of investing in these people if they're going to be transitioning within a very short period of time? Will you get the requisite return on investment? So it becomes a very circuitous
And
conversation.
it's very frustrating, Joseph, because what I want to point out to the powers that be is that the individual is here now.
Right.
And we don't know what tomorrow is going to bring. And what this individual is demanding is key development opportunities, career mapping opportunities, value added work, creating a space that allows him or her to shine. Yes, there is the risk that after 5 years, 6 years, the individual will go. But do we really have the right to hang on to anyone for 10, 11, 12 years, like in the 90s, and say, well, if you leave, you're not loyal?
Yeah. No.
Sometimes people leave for better things.
Of course. Of course. Of course.
Yes.
Of course.
And my thing is, when I have you, Joseph, I'm going to train you. If you are performing and you are delivering as you should in your job.
No, it makes sense. And the other aspect of it, no, is that in all of this, I think the management frame is a critical component. Let me guide you where I'm going with this. In some companies, you have hierarchical structures. Some have democratic structures. Some of them you have what we call visionary structures.
Yes.
And some of them, to be honest with you, like I tend to be one of those that do the kind of hybrid approach, whereby what I treat the organization almost like it's flat, right? In the sense that I then develop basically what would be like an intra-company think tank among the team members. So in other words, all ideas contend. I mean, obviously you're the leader, so ultimately you have to take the decision. But all ideas contend, and I find that when I have done that, I've gotten, frankly, the most out of people. I mean, obviously I have to use a lot of emotional intelligence because whereas that works among some of the more senior team members, you have to ensure that the more junior staff don't feel left out, or you understand, that type of thing. But I have found that works. But I don't know what, from your experience, you have far more experience in these things than I do. What does today's workforce look for? They look for the old-fashioned hierarchical thing on the micromanagement. They look for the democratic thing. What they look for?
They look for leadership they look for leadership through influence, not authority. That's exactly what they look for. I think that's the best way I can say it. It's not about positions. It's about how you influence and how you lead. So what I get from what you're saying is that you have really pushed a culture of stripping away the titles, so to speak. So it's not okay because you're junior or you're senior. You've stripped that away and you've pushed a kind of collaborative teamwork environment where cross-functional teams can come together and they can innovate and they can collaborate and they can ideate, whether it's a hybrid or a co-locating circumstance. What you find is that the new workforce likes that, Joseph. That works. And I'm not surprised that you have seen significant results in a positive way and that you've moved the needle, probably in terms of even engagement. If you do like a pop quiz, a spot on, checkpoint, because the focus on titles, the focus on I am the boss. So therefore, it's my decision. Doesn't work. Yes, Joseph, we all have to have a boss. And sometimes, yes, Everyone cannot be a part of the decision making, but that does not mean that we do not create a space for persons to be able to share their ideas and at least feel that they are a part of what we are going to do to move the business forward. And that's really what I like about where I'm working now, because it's a younger demographic. It's our fairly young leadership team. And a lot of how we manage is through cross-functional, innovative platforms. We use a lot of digital tools. So whether it's Sleek Form or Slack or Jira, in our teams, we have like an AI council. We're always trying to think outside the box to generate that level of engagement amongst all persons. So we're not focusing on I'm the chief of HR and you're the this. No, we're really working towards a common purpose, and that we've seen some really good results in terms of moving the needle on engagement and fairly steady attrition rates.
No,
So
well, I
even though
mean,
on one hand I'm saying that, it's okay if you're a high performer and you want to leave, but luckily we don't have many of them leaving right
yeah,
now.
yeah, 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 yeah. No, man, I get you on that, and suppose then it strikes me. I have to raise this because
Hmm.
coming out of the COVID experience, one of the problems I was having, I must confess, is I found myself pushing back against a really archaic frame in the sense of you had a lot of persons who were saying, oh, the people need to come back into the office. And I keep saying, but we functioned, we actually got more out of the team when the people were working remotely and checked in, every couple
Hmm.
of days, so to speak, versus them being sitting down here just to say you're sitting down in an office. I don't get it. But Stephanie, I don't know, perhaps you have a different perspective than I do. But the truth of it, I do not get what has been the resistance to the remote working, because it is something that it was proven to have worked.
Joseph, we're going very controversial now because there are some companies that they're adamant that it has to be 5 days a week. And there are some companies where, no, you don't need to come in at all. For me personally, I do tend to work better within the office. So
Okay.
you find that I come in pretty much every day, but I have flexible hours. So it works for me. So I may come in at 7 o'clock in the morning, I may come in midday. A lot depends on what the schedule is like for the day. But we do push a hybrid environment. And I can tell the listeners that forget the data for a minute. Forget what the persons who say you have to work 5 days a week, and any organization that affords a level of flexibility, you must have a competitive advantage in the workplace, because what COVID has shown us is that persons want the flexibility.
Well,
So sometimes it's not necessarily the flexibility of being able to work from home. Sometimes it's the flexibility of your hours, right? So a flexible organizational culture when it comes to how we work is always going to give you a competitive advantage. And what I will tell you is that what COVID has taught us is that having me come into the office and just kind of hovering to make sure I'm doing the work is nonsense. As
yeah,
leaders, we need to start focusing on the output.
yeah,
So whether you
absolutely.
do it at 4 o'clock in the morning or 4 o'clock in the afternoon, are you giving me what I need to give? I don't have to be at my desk to do it.
No, absolutely. And therefore, I mean, because we have to wrap this up now, but as we look to leave this conversation, Stephanie, your best guess, in the next
Mhm.
5 years, where do you see the human resources, um, how should I call it, framework? How do you see it evolving further?
In the next 5 years, I feel that it won't just be, talking about HR having a seat at the table. I think it will be key and mandatory to the success of any business where the HR function is seen as important as any other revenue generating functions, because the labor landscape has changed. The workforce has changed in terms of the demographic. We're getting younger. Persons who are going into the work world. And we are now competing with machine learning. We're now competing with digital transformation. We're now competing with AI. In the next 5 years, the workforce will look different, and you will need to make sure that your people agenda is current and relevant to deal with all of these competing issues. Because at the end of the day, machines can't do certain things. You're going to need your people. And the kind of skills that you're going to want your people to have are not skills that probably I would have focused on when I was coming into the work world. There are different type of skills. So how we recruit will be different. How we treat will be different. The kind of questions that we ask on interviews will be different. How we manage performance will be different. So it's an exciting time. It's an exciting time for the profession. And my only prayer is that the region will be ready to capitalize on, I think, some of the changes that we will see in the next 3 to 5 years in terms of how we manage human capital in
All right, Stephanie Murdock, thank you very much. Chief Human Resources Officer at Barita Financial Group Limited. Stephanie, I got it right.
Yes, you
Thank you
did.
very much.
World of constant change, insight is your greatest asset. At Joseph Cox and Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox and Associates. Insight, experience, impact.
This is Market Watch on Caribbean Business Review. I am Claudine Lloyd. Across Latin America and the Caribbean, foreign direct investment rose 7.1% to nearly $189 billion in 2024, according to ECLAC. But most of this was from reinvested earnings, not new capital, and digital investments remain weak at just 7% of global flows. Meanwhile, Suriname's sweeping debt restructuring has unlocked $582 million in fiscal space, dropping public debt from a peak of 121% to 83.1% of GDP by end 2024. The country now targets a 32% ratio by 2029, supported by offshore oil development and IMF backing. April saw the Bahamas swing to a $2.1 million deficit as revenues dipped 4% and spending rose nearly 8%, led by increases in subsidies and goods and services. At the same time, digital payment volumes are booming. Debit card usage surged 50% to $4.2 billion, while ATM transactions hit $3.1 billion. However, RTGS transfers fell nearly 22%, suggesting a shift in how consumers transact. Concerns are also rising over data integrity. An IMF technical mission flagged $923 million in potential overstatement in tourism expenditure figures, urging central bank oversight of data collection. Despite strong awareness of the sand dollar, adoption is sluggish. Only 20% of survey respondents had ever used it. Omni Group points to low merchant acceptance and knowledge gaps as major barriers. In the property market, up to 50% of high-end homes are now being sold off-market in enclaves like Leaford, Key, and Albany, driven by privacy and vetting concerns. Still, VAT compliance remains mandatory. Turning to Jamaica, in May, remittances climbed 5.9% to US $286 million, maintaining momentum from the US, UK, and Canada. Cumulative inflows for the year reached $563 million, up 4.2% year on year. Yet Jamaica's trade deficit widened in quarter one. Imports rose to 1.89 billion US dollars, while exports slipped 1.9%, weighed down by a 35% drop in mineral fuel. On the digital front, the country is now paperless for private vehicle registration, thanks to the new EMVRC system, allowing Jamaicans to complete renewals entirely online. And while the national ABM network achieved 92.2% uptime in April, it still missed the 95% benchmark. Rural uptime lagged urban centers, and average recovery time for outages stood at 2.8 hours. In Trinidad and Tobago, small businesses are feeling the squeeze from a worsening foreign exchange shortage. With official channels constrained, some are forced to the black market, where rates exceed 8 to 9 TT dollars per US dollar. Stakeholders are pushing for a rules based forex allocation system, digital processing, and better support for exporters. In Barbados, the central bank will launch an instant payment system by March 2026, enabling real time, low cost transactions across banks, credit unions, fintechs, and government. It will be mandatory for all licensed financial institutions and is expected to significantly enhance financial inclusion. In the meantime, real GDP expanded by an estimated 2.5% during the first half of 2025, driven by strong activity in construction, business and other services, wholesale and retail trade, and tourism. Guyana has launched the Caribbean's first premium free crop insurance for 6,000 rice farmers, covering losses from climate events. Backed by UPL and Philip Morris, the initiative aims to boost resilience, credit access, and food security across the sector. Tourism in Belize continues to soften. June 2025 saw a 7.8% drop in international arrivals, with domestic air traffic falling nearly 13%. Carriers like American and United reported steep passenger declines, extending the downward trend that began in May. In the Cayman Islands, sweeping immigration reforms are on the table. A draft law would extend the path to Caymanian status for foreign spouses to 22 years, replacing the current 1 year wait after permanent residency. Civic engagement and cultural integration will be prioritized over wealth and property. Bermuda still leads the region in 5G deployment, but growing adoption is slowing speeds. Median 5G downloads have dipped below 4G, highlighting congestion challenges as 31% of devices now connect to the network. Before we close, let's take a quick look at the region's foreign exchange and stock market snapshot. On the currency front, the US dollar remains strongest against the Guyana dollar, trading at GYD 218, and the Asian gourd at HTG $131.37. The OECS East Caribbean dollar hold firm at $2.71 to $1, while Jamaica's dollar trades at $161.22 to the US dollar. Turning to the Caribbean stock markets, the Jamaica Stock Exchange fell 0.87% to 302,985, while the Trinidad and Tobago Index dipped 0.36%. Barbados's BSC local nudged up slightly by 0.1%, while the Bahamas BISX, Bermuda BSX, and ECSC indices held flat. In corporate movers, JPSCO Limited 7% preference shares led the gainers, rising over 18%, followed by Sterling Investments at 8.8%. Top losers include LJ Williams Limited in Trinidad, down 13.6%, and Sagicor Real Estate X Fund, which slipped 10.4% on the GSC. That's Market Watch for this week. I'm Claudine Lloyd. The Global Pulse is up next.
Of constant change, insight is your greatest asset. At Joseph Cox and Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox and Associates. Insight, experience, impact.
This is Global Pulse on the Caribbean Business Review. I am Claudine Lloyd. All eyes are on Stockholm, where U.S. and Chinese officials meet next week to negotiate an extension of their 90-day tariff truce. The current pause expires August 12. Treasury Secretary Scott Bessent struck a hopeful tone, with talks set to cover China's manufacturing overcapacity and oil imports from sanctioned states. Meanwhile, the U.S.-India interim trade deal remains stalled ahead of the August 1 deadline, with agriculture and auto tariffs blocking progress. President Trump's threat to reimpose 26% tariff on Indian imports still looms. In contrast, Japan and the US reached a breakthrough, agreeing to lower auto tariffs from 27.5% to 15%, a level many now see as a global benchmark. This has helped ease pressure on global supply chains and calmed European markets. But tension lingers. The EU is preparing a 93 billion pound in counter tariffs to US goods should threatened 30% US duties take effect August 1. And President Trump has signaled a baseline 15% tariff floor, with some partners facing hikes up to 50% without reciprocal access. The IMF is warning of a resurgence in global current account balances, with the US deficit up $228 billion in 2024 and $1.13 trillion, and China and the euro area both posting sizable surpluses. The fund cautioned that tariffs don't fix trade gaps, urging the US to focus on fiscal restraint, China on consumption, and Europe on infrastructure investment. On the energy front, the US is preparing to relicense Chevron and European firms for limited operations in Venezuela, softening its oil stance. The move aims to allow swap deals and contractor payments without direct cash to the Maduro regime. In China, the government reported a 2.57 trillion yen deficit for the first half of 2025, driven by weak revenue and rising expenditure. Fiscal pressures are deepening despite bond issuance and trading programs, prompting expectations for further stimulus. Germany's business sentiment climbed to a 13-month high in July, but outlooks remain subdued. Despite a £500 billion infrastructure push, growth momentum is lacking. Over in Egypt, the current account deficit narrowed 72% to $2.1 billion, thanks to rising remittances and tourism. But FDI fell sharply and oil import bills surged amid domestic shortages. In India, public sector bank non-performing assets dropped over 50% in 4 years, reflecting structural reforms and tighter credit oversight. In the United Kingdom, public borrowing jumped to £20.7 billion in June, the second highest June level since 1993. With debt now at 96.3% of GDP, the government faces pressure to introduce wealth taxes and extend tax freezes in its upcoming autumn budget. Inflation persists, with grocery prices up 5.2%, pushing consumers towards own label brands. The jobless rate rose to 4.7%, while businesses accelerate layoffs amid global tariff uncertainty. Still, there's momentum in innovation. The UK signaled a strategic AI partnership with OpenAI, supporting research and scaling public AI infrastructure under its £1 billion compute plan. The initiative could boost GDP by £47 billion annually. Finally, the World Bank's Global Findex 2025 reports a surge in financial inclusion, especially in developing economies. As of 2024, 79% of adults globally now hold a financial account, driven by mobile money. In Latin America and the Caribbean, digital account use has reached 37%, and over 60% of adults made or receive a digital payment last year. Still, 1.3 billion people remain unbanked, though most own mobile phones, highlighting a massive opportunity to close the gap through interoperability and digital trust. Before we wrap up, here's a quick look at global markets and energy futures. Oil markets showed mixed signals. WTI crude fell to $65.16, down 1.32%. Brent crude slid 1.14% to $68.39, while the OPEC basket bucked the trend, rising 1.25% to $71.19. And natural gas edged up 0.52% to $3.11. In the global stock markets, Wall Street posted gains. The Dow Jones rose 208 points, and the S&P 500 and Nasdaq followed suit. Europe was mixed. France CAC 40 climbed, but Germany's DAX slipped nearly 0.32%. In Asia, Japan's Nikkei and Hong Kong's Hang Seng both fell sharply, down 0.88% and 1.09% respectively, reflecting investor caution amid trade uncertainty. That's your global pulse for this week. I am Claudine.
Well, that's a wrap, ladies and gentlemen. We thank you very much for your continued attention and engagement with this program. Our profound thanks, though, also go to Stephanie Murdock, who was the Chief Human Resources Officer at the Barita Financial Group, where we looked at the whole issue of performance appraisal or performance management across the workforce. And coming out of that conversation, a couple of really interesting things came to mind. One, performance management strategies need to evolve with the workforce. Training, of course, should be prioritized and not treated as an afterthought. We also have to take into consideration the issue of emotional intelligence and its application and great utility within the labor force and within the workforce nowadays. And that HR must also be adaptable to changing workforce dynamics. And of course, organizations should focus on output rather than presence. And that really brought to bear that whole remote working conversation, which we all need to address, I would think, with some amount of urgency, given our experiences coming out of COVID. But that being said, we also looked at CBR briefing today, we did delve a bit into the whole matter of the changing face of immigration right across the region and how it impacts our citizens, as well as we continue to explore the news and so on during our Market Watch and Global Pulse segments. In the interim, I just want to remind you or advise you that a new issue of the Caribbean Financial Dispatch is now available. And as per usual, we'd invite you to subscribe, or you can send us a note at caribbeanbusinessreview@gmail.com, or you can access it on josephcox.org at the dedicated CBR page within that website, as well as we continue to invite you to support us on our social media channels. So we have the WhatsApp channel, we have on TikTok, we have YouTube, and we now have introduced YouTube Shorts as well to broaden and deepen our base. Of course, LinkedIn and all the other social media channels. We continue to, and Spotify, of course, we continue to invite you to support us and, view our broadcasts or whatever the medium you would like to utilize, we're making it as widely available as we possibly can. We also wish to extend a profound thanks to MKR Radio for their continued support and the listeners there too. And because we really do appreciate what is going on with that as we continue to develop this platform and deepen our reach even further. Now, with all that said, ladies and gentlemen, it's just left for me to thank you again for your continued engagement and to invite you to like, share, and subscribe to this broadcast as it helps us grow even further. So with that said, I'm just here to remind you that my name is Joseph Cox, and this has been CBR.